Annual financial support from viewers like you. This is Frontline.
Individual mutual funds. There are 400 mutual fund families, all with their product wares spread out for you. There are bond funds, there are emerging market funds, there are Canadian resource funds, and if you want to invest in something and you can't find a fund for it, wait 15 minutes and someone will devise a fund to sell to you.
We have 15 no-load mutual funds, the Emerging Growth Fund, Capital Appreciation Fund.
We don't invest in companies involved in the manufacture of weapons or the production of nuclear energy.
Value Fund, Growth and Income Fund.
We generally tend to pick stocks that pop up on our buy list as a result of our computer screens.
Government Fund and Reserve Fund.
I have to ask you, I've never heard this before. I've never heard of anybody with a Nebraska tax-free fund.
Well, it's both federally and state tax-free and invest in municipal bonds.
But you have to live in Nebraska to get this.
That's right.
Is it just our imagination, or do these funds all seem to do nothing but go up?
The small cap fund, which is directly correlated to our managed accounts, is up 36%.
It was up to 20.41%. Last year was up about 59%.
1,000% or something?
I don't know if it's that much, but it's certainly approximate that.
And the better these funds do, the more the people who run them seem like superstars.
5 years from now, I think you'll be able to name the top 25 mutual fund managers in the country in the way that you'll be able to say who runs IBM and who runs Ford Motor and who runs...
And in time, and really not so long, stock market got back to where it was. And that led to the feeling that in the long run, being in the stock market is great, that weak markets are buying opportunities, not times to sell. This wonderful event in 1987 is what people today are carrying around in their heads. Don't worry if the market goes down, nothing bad can happen.
After the crash, American investors embraced the market, and especially the mutual fund industry, with renewed fervor. Today, 1 in 50 American households has money in the Magellan Fund, and the customers of Fidelity Investments alone constitute some 4% of the country.
There's a huge amount of money that flows through here. I mean, we're talking about billions and billions of your and my money, America's money.
Absolutely. We do, you know, it's public information, we do between 5 and 7% of the trading on the New York Stock Exchange.
Comes out of this room.
This room, right over on
these
here.
People.
You got it, these people.
Even after he retired from Magellan, Lynch remained a fanatical popularizer of the stock market. But he had one important caveat. You needed patience.
My best stocks have been the third year I bought them, not the third week, not the third month, the third, fourth year. People want something to happen in a week and 2 weeks. It doesn't work that way.
You got it all. KNBR 68, San Francisco.
It's only been 6 years since Lynch left Magellan, but today's fund industry has a whole different mindset.
Garrett.
Yeah.
MDI, we're going to try to cross 75 G's, 7/8 the figure.
Okay.
Do you need to be involved either way?
No, thank you.
Asking? No?
No, thank you.
No interest?
No interest.
Yes. No, thank you. Next. Hey, if you hear of any pieces of cardiac pathways down in the hole this afternoon, give me a call, please.
AAS, you sold a whopping 800 shares at 32 5/8.
That's what I like.
Beautiful.
See you later.
Thank you.
Bye. God bless this country.
Garrett Van Waggoner is still the new kid on the block,
yes,
but the comparisons have already begun.
Yes, I do.
How do you feel when you get compared to Peter Lynch?
A little embarrassed, a little bit surprised, and flattered, I guess would be the things that come to mind. He's a legend in this business. Does he want to come out of the position, or is it just trimming? It's going to be a long time before I'm willing to sort of accept that kind of status. I'd like to do it for 10 or 15 years first.
But Garrett won't be given that kind of time. In the overheated market of the 90s, fund managers are scrutinized not just year to year, but week to week and even day to day.
This is not a charitable business, charitable institution.
By the summer of 1996, Garrett's fund had long since hit its peak of 60% and was stumbling badly.
Yeah, 45, under 45, give me a holler.
Thousands of people who came in at the top were losing money with Garrett.
Right, I want it flat on its butt.
How much did you lose yesterday?
I lost about 18 million in the big fund.
No,
too high.
And that was the worst day you've had since you opened for business?
Worst day I've had since I've been open for business.
You've got a tremendous amount of money in that fund that came into the fund after it was up 40 or 50% or 60%, with the expectation that that's what the future is going to look like.
My guess is, as he got close to being up 60%, he probably raised 80% of the money he has under management. So it's quite likely that the overwhelming majority of his investors, their first taste of his performance was a sharp setback.
Under this kind of short-term pressure, Garrett doesn't have time to buy and hold the way Lynch did. His strategy is all about moving in and out of stocks quickly, sometimes in a single day. Always he's taking the pulse of the market, trying to stay one step ahead of it. It's high-stakes poker.
I got one more for you today. I've got 25,000 RXT to buy with a 6 top, please.
What's particularly dangerous about the present mutual fund boom is what is called investing is really speculating. The techniques are more about trading, rapid turnover, paying any price for a stock as long as it goes up or behaves a certain way. It is about crowd behavior and stock price behavior, not about analyzing the underlying businesses.
God bless this country. Let's feed the old ducks while they're quacking.
The companies Garrett is investing in aren't Dunkin' Donuts and Kentucky Fried Chicken. They are mainly technology and healthcare stocks that most of us have never heard of.
HNC Software has gone from up 1 to up 7.5 in about a minute and a half.
New companies with little or no track record.
Marking them up.
The way the fund industry has changed has been to liberate fund managers to pursue hot performance anywhere they can find it. And the result of that is, when you buy that fund, you have no idea what that fund manager is going to do with your money. He's free to put it in almost anything.
That's what I like.
Garrett's stock picks are among the most vulnerable and volatile around. But at the end of the day, they can produce eye-popping results.
Oh my God, look at Integrated Systems today, up 8 3/4. What did they discover gold?
Do you make money today?
Yeah, we made good money today, actually. And we had some real high flyers today, so we had a good day today.
Do you have a guess how much?
I'm going to say we probably made about 13, 14 million. It's going to be a guess today.
Actually, he guessed wrong. It was more like 22 million.
Not bad.
Not bad.
The problem is that all of the mutual fund managers, I think, are trapped in this rather deadly, vicious circle, that the more successful they are, the more money flows into their mutual fund. The more money that flows into their mutual fund, the more difficult it is for them to beat the market averages or even to match their own past performance. And I think that we may see future situations like that of Jeff Vinnick at the Fidelity Magellan Fund, where mutual fund managers will try to do very strange and unconventional things because it becomes increasingly difficult to outsmart the averages.
Jeff Vinnick was a young whiz kid at Fidelity when he inherited the Magellan Fund in 1992. Within 3 years, Magellan had ballooned to over $53 billion, making it by far the biggest fund in the country. In early 1996, Vinnick made a dramatic move, shifting Magellan heavily into bonds and out of stocks. He was betting, in effect, that the bull market was about to end. But he bet wrong.
Jeffrey Vinnick made a bad guess and bought bonds and missed out on a truly, wonderful levitation in the stock market, and had the epaulets of a celebrity stripped from his shoulders and left Magellan Fund.
The man who runs the world's largest mutual fund has resigned. Jeff Vinnick.
Jeff Vinnick's departure should send up cautionary flags for the mutual fund investor.
Magellan's returns this year have been well below most other comparable funds.
His departure means that people are really not willing to take short-term underperformance in the expectation of future return. I think that's the really scary thing, that he really only underperformed for a couple of quarters.